Stocks drift lower but are off the day's low ahead of the weekend after a heady day of gains yesterday. Consumer durables and oil and gas eke out some gains, but tech and realty drag. The mid-caps do a relative outperformance in today's session.
Avenue Supermart-owned Dmart sees sales reports ahead of estimates, sales fueled by a higher than expected store count addition. The stock surges, but some analysts remain wary of the quick commerce challenge.
MotoCorp sees domestic sales slump in December, dipping far more than estimated, reinforcing the slowdown in the two-wheeler segment after a high growth phase. Exports, however, are seeing a sharp uptick.
Crude prices surge as holidayers return, driving up demand even as US inventories dip. Optimism around a pickup in the Chinese economy also supports prices and also reflecting in shares of ONGC and Oil India. You're with us on Halftime Report this Friday afternoon on CNBC-TV18. I'm Hormis Fatakia. With me is Nigel D'Souza. And Nigel, when we left the studios around an hour ago, the Nifty was nearing the lows of the day, but it's been a very significant recovery from those levels.
Well, and I think the technical expert who joined us, Somil, I think, so he said that he will be looking to buy on dips, and he believed that every opportunity is a buy on dips. And I tell you what, after you get a couple of good sessions, it seems that the odds are that you look to buy the dip and then in fact hope that to see a bit of a recovery. But I think portfolios today could be feeling far better than even yesterday, because a lot of mid-cap stocks actually are doing quite well, and some of those stocks that actually have underperformed have done well. Case in point being some of those retail-oriented stocks. You have Dmart, V2 Retail, V-Mart, the new listed company, Vishal Mega Mart, all of them. That's really the pocket that's done quite well. And the metal stocks as well that actually have underperformed, they as well have perked up in trade. So the index itself is doing quite well. Vedanta, case in point, has been an underperformer for the last 6 months or so. That's up close to 3% as we speak.
Indeed, and that is what has been driving these names higher, right? Retail belong to these retail stocks, be it Dmart, maybe off the highs of the day, but you don't see a gain of around 11 to 12% in shares of Dmart every day. So good going for all of these retailers. And Vinny is now joining in to tell us more on what brokerages are making of this business update from Dmart. Vinny.
Yes, so good update that is coming for Q3 FY25 for Avenue Supermart. Now, overall, a growth of around 17% is what they're seeing in terms of standalone revenue. Last time the growth was around in last quarter, it was around 14%. So the pace of growth, that started seeing an improvement. Also, the store addition pace, that is seeing an improvement. Last quarter, the company had added only 6 stores. This time, they've added 10 stores during this quarter. So yes, improvement in terms of both these factors is a key factor that everyone is keeping an eye out on. And that is why CLSA continues to maintain an outperform rating. Target price of 5,360 rupees per share. Now on the flip side, we have Citi, who is maintaining their sell rating, target price of 3,500 rupees per share. Yes, they said that surely the growth is seeing an improvement, but they believe that the throughput that is continuing to be impacted by adverse product mix, as well as the intensity of quick commerce, the competition increasing on that pace is maybe something that they are cautious about, and that could impact Avenue Supermart going forward. So cautious stance is what they continue to maintain, given that the PE multiples are also quite high for Avenue Supermart. Goldman Sachs also maintaining their sell rating, but they said that Q3 are surely seeing an improvement in terms of growth. Margins is a key factor that they'll watch out for going forward. And in terms of overall, the quick commerce, how is that scaling up, and impact of that on Avenue Supermart. And lastly, Morgan Stanley too maintaining the underweight rating, target price of 3,702 rupees per share. Especially in terms of the trend that they are highlighting is that the top line growth, though it's seeing an improvement, it's still below the peak growth that they've seen for Avenue Supermart of 20%. So that is what they want to watch out for going forward as well.
Okay, all right, Vinny. Thanks a lot for that. Well, let's focus on a couple of more names. Hindustan Zinc as well as MOIL. I'll tell you what, for Hindustan Zinc, this operational performance has never been a stock mover, and it normally moves according to market move, and that's precisely what's happened today. Remember, the stock has corrected a goodish bit from the recent peak. It's even below their OFS price, but today it's perked up close to around 5% from the lows of the day. But let's run you through the quarterly updates. For Hindustan Zinc, it was actually a subdued quarter. The mine metal production was down by close to around 2%. The saleable metal production as well came in more or less flattish, because zinc was higher, but lead was lower. And also silver was down by close to around 18% on a year-on-year basis. It seems the street though was prepared for that due to the change in the mining sequence at the SK mine. So that stock has seen a good recovery from the day's low. Just pull up the intraday chart. That'll tell you a better picture. MOIL, they say they have achieved the best ever Q3 performance during the past quarter. So the street likes that. Manganese sales are up by close to around 13%. The production number is coming at around 4.6 lakh tons. And this was actually a good showing in the past quarter because 9 months actually is nothing too great. The growth is only around 3.5 to around 4.5%. So with this growth of close to around 13% in sales in the past quarter, the street likes it. They also said that they expected to surpass the best ever revenue showing in the third quarter. So put all this together, the stock after correcting 35% from the peak, it's seen a good bounce back in today's trading session. It was, I think, if I'm not mistaken, 580 rupees in the middle of 2024. From there, it's seen a correction, pulling back today 3.5%.
All of these names, right? MOIL, Vedanta, Hindustan Zinc, all of them are seeing a swift recovery from the lows of the day. Hindustan Zinc, in fact, is now at the day's high, almost 4% higher, as is Vedanta, 3% higher there as well. Vedanta's high is around about 520, if I remember correctly.
Plus
the dividends, of course, yes.
So actually, it, put that together, it'll be 540,
560, right? Yeah, should be. And MOIL, even MOIL too, 588 being the recent peak there for the stock. But time for a short break. More on the markets and specific stocks on the other side. Stay tuned.
Welcome back. Well, let's focus on one of the top losers today. MotoCorp is under pressure post the weak showing in the December sales numbers. There's a degrowth and it's worse than what the street was working with. Rima joins us to break that down for us. Rima.
Thanks so much for that. So, two-wheelers clearly are under pressure. If you remember, even Bajaj Auto's numbers were disappointing. And now you've got MotoCorp. And these are stocks which have been under pressure. Both Hero and Bajaj are down 30% from their recent peak levels. Now coming to MotoCorp's December sales numbers. Total sales are down 18%, worse than the CNBC-TV18 poll, which predicted a 5% drop. Domestic sales is the problem. Domestic sales have dragged by 22%, partly cushioned by the 90% rise in exports. So exports has been strong for two-wheelers across the board, but domestic sales is a problem. So just putting up, all the domestic sales numbers across for the two-wheelers. Bajaj domestic sales were down 15%. For MotoCorp, it was down 22%. For TVS Motors, it was flat. But again, their total sales were up 7%, but that up was purely on account of exports. Domestic hasn't contributed. Premium is doing very well. So Eicher Motors, sizzled with its December sales numbers, 25% jump. Exports, as I said, has been very robust. So Bajaj, TVS, Hero Motor, all clocking in very strong export growth numbers. And the electrification trend continues. EVs are now about 6.1% of the overall sales versus 5% in FY24. And the pole position, the market leader is now Bajaj Auto with a 25% market share, followed by TVS Motors, and Ola Electric is in third place. Back to you.
Very interesting, Rima. Thanks a lot for that. At a 7% growth, TVS Motors turns out to be an outperformer among the two-wheeler companies because Bajaj Auto sales were down 1% and Hero's sales down 17% when the estimates showed a 5% downtick. Thanks a lot for that, Rima. That was auto sales summarizing how they were for the month of December. But the other stock that's doing well today is Bank of Maharashtra. That's after his third quarter business update. Abhishek is here with more on that. Abhishek.
Well, in a rising interest rate scenario, if you take a look, the improvement in CD ratio is being well paid off by investors. That is what seems to be the theme of this quarterly business update that has been coming in. Now, deposit growth for, Bank of Maharashtra has been weak, up about 13.5% YOY and just 1% quarter on quarter. However, they have been able to sustain their CASA growth as well at about the deposit momentum on a sequential basis around 0.98%. So the CASA ratio for them has more or less been stabilized at about 49.3%, which was the same number in the previous quarter as well. But the heartening point to see is the loan growth. Loan growth is very robust at more than 21% YOY and more than 5% sequentially. So if you take a look, the credit deposit ratio that's come up to close to 82%. An improvement of more than 500 basis point YOY and more than 300 basis points sequentially, which augurs well for the net interest margin to either improve or remain stable or on the higher side if at all slippages remain under control for them. Back to you.
Okay, all right, Abhishek, we can't let you go at that though. You're also tracking REC and PFC because MK has just initiated coverage on both those two stocks. Tell us more.
Well, MK has initiated coverage on REC and PFC. They have given buy recommendation for both the stocks. With PFC, the target price is 600 per share, and with REC, they have given a target price of 650 per share. Three key, points that they have laid out with respect to why investors should buy PFC and REC. Number one being the planned capex of over 33 trillion rupees between FY23 to FY32, which provides long and high growth possibility for these lenders. They also said that previous cycle lessons have been learned, continued benign competition from banks, and gradual diversification approach is helping these lenders. Along with that, they provide reasonable comfort on the asset quality, that is the gross NPA and net NPA, and hence add confidence with respect to profitability being on the higher side. Valuations are not cheap. They say it is higher than the historical average of 0.7 times price to book value, but take note of the fact that they remain profitability and growth profile being stronger than historical average as well. So they estimate AUM CAGR of around 13% and 18% for PFC and REC over FY24 to 27, and they expect ROE of around 19 to 20% over FY25 to 27. Back to you.
Abhishek, thanks a lot for that. REC and PFC, the best performing PSU stocks of 2023, they had surged 250% each that year. It was a very subdued year in 2024, but bullish calls coming in now for both these names.
Well, besides the market action, Horma, just want to give our viewers an update with regard to India versus Australia. It's been a difficult day, at the start of the 5th test match. Just bowled out for 185 runs odd, but I think our captain, Jasprit Bumrah, he wants to put in a bit of a fight. Everyone thought he's going to come and, bowl, but towards the end of the trade, I think he's hit a few sixes and he's finished off with 22 runs. So let's hope now the boys come in there, bend their backs, put up a fight. Come on, Hormuz, don't lose hope. We'll fight back in this test match. We'll win this test match.
As Mohammad Siraj said, we trust only Jassi Bhai. So we'll continue to do that and trust our boys.
We are going to win this match.
Well, moving on then, Sebi has passed interim orders against Rohit Salgaonkar, Ketan Parekh and certain Kolkata-based entities on allegations of front-running. Yash is joining in with more on that. Yash.
Well, Hormaz, just the name Ketan Parekh, coming under Sebi's radar created quite a bit of interest as far as this latest order is concerned. Now, essentially, Sebi's passed an interim order against a few entities, and two of them are individuals named Rohit Salgaonkar and Ketan Parekh. Sebi order against Rohit Salgaonkar and Ketan Parekh is in the matter of front-running, and an amount of about 66 crore rupees has been ordered to be impounded through 6 front runners in this particular order, as well as Ketan Parekh and Rohit Salgaonkar. Additionally to that, Ketan Parekh and Rohit Salgaonkar have been asked, and all the other entities, to sort of disclose all their assets to Sebi. Banks, wherever their accounts are, have been asked to ensure that no debit happens out of those bank accounts. And again, Dmart accounts, depositories have been directed to ensure that no debit of shares happen from the Dmart accounts of these individuals. What is the whole allegation? Two important things: traditional front-running case, and the second one is use of complex trading strategies to take advantage of prior knowledge of impending trade. Now, as I said, there are 3 main entities in this particular order. There are 6 front runners. There's Ketan Parekh and there is Rohit Salgaonkar. Rohit Salgaonkar's role in the entire modus operandi was to dictate orders of some big clients based out of US. Now, he had partnerships with Nuvama, Motilal Oswal to share the brokerage. Additionally, what he used to do, as per allegation, is that he used to pass on information with respect to these large orders coming from big clients to Ketan Parekh, who then in turn passed on these impending orders and the information there to these front runners. The trades of these front runners were executed ahead of the large trades from these big clients, and of course the positions were then squared off once those large orders were executed, and the reflection came into the stock price of the company. Sebi's unearthed this entire modus operandi that was running between these different entities and passed its interim order, and the investigation will continue in this matter from here on.
All right, thanks a lot for that, Yash. Important details there shared by Yash. Time for a short break. We leave this segment with the Nifty below the mark of 24,100, still down 100 points, but still significantly off the lows of the day. What next and what are the charts indicating? Pritesh Mehta of Yes Securities will join in to answer just that on the other side. Stay tuned. Welcome back. Still 100 points down on the Nifty, but there is plenty of stock-specific activity that is taking place. Pull up Saregama first up. That's up around 6.5% in today's trading session, and it is also gaining on the back of some strong volumes at almost 5 times its daily average. As of now for Saregama, almost 7% higher. And also pull up Tata Motors. Is the recovery that it has seen from the lows of the day. It's moved to the highest point now, 4% higher on Tata Motors. Remember, it's an inclusion in the India portfolio for CLSA and other 3 stocks as well, be the NTPC, Britannia and Nestle. So Tata Motors seeing good moves in today's session. But what is the setup on the FNO side looking like now, considering the moves that we are seeing on the Nifty? Nigel, tell us more on that.
Well, that's right. We're seeing some interesting action, Hormuz. The 24,100 call and the 24,200 call, they've seen a big open interest build up, which is telling you the bears, they want to defend the higher levels. As I said this morning as well, 24,400 becomes very important, going by the options data and going by the highs that we saw on December 18, 2024. From there, the markets went and corrected close to around 1,000 points. So that's why we're seeing aggressive writing at both these 2 strikes. Now, on the downside, what's giving hope is the 24,100 put, the premium out there is up only 10-14% approximately, and the markets are down close to around 100 points. So there is some kind of mixed activity that's taking place at this particular level. And there is a sense that there is some writing as well that's taking place out here. So the near-term levels you're looking at, today we bounced off the 24,000 odd mark. That could very well be an algo-related bounce back as well. Because we went to pat 24,000 and from there we bounced back. Now looking at the options data for the day, you don't want to breach the 23,950 mark on the downside. But I'll tell you what, if you can get to that resistance zone, 24,150, 24,200, which if we pull up the 20 and 50 DMA, it's in that range itself, 24,150 to around 24,200. Then in fact, we could see a bit of a further bounce. For the time being, we're down 100 points on. But I think that temptation is to, go in there, try to buy the Nifty and see if we could bounce back. Though yesterday's move is mostly related to the weekly expiry that we saw out there. So that's the mark that I'm talking about. Resistance mark, 24,150 to around 24,200. I think the bigger trend though, Hormuz, will come in from only next week, when we have further clarity. And the 2 stocks that I named this morning as well, if we need to go higher, we need them to move in unison higher. For the time being, Reliance Industries is batting well. It went to around 1,200 rupees odd. From there, it's seen a bit of a bounce. The problem is HDFC Bank, the street is waiting by for its quarterly update. And that could be the game changer for me. That will swing the index in the near term. For the time being, it's been soft. Even yesterday, it was a relative underperformer. Today as well, it's down close to 2%. So HDFC Bank needs to come to the party. For the time being, there is some bottom fishing that we're seeing on the other big name, Reliance Industries. Why do we say this is important? Both of them put it together, that's 20-22% of the index we're talking right away.
Indeed, all eyes on HDFC Bank's business update, which should be out either today or maybe start of next week. So we'll keep an eye out on that. But is this a buy on dips market? Pritesh Mehta of Yes Securities is joining us on the show to answer that question. Pritesh, good afternoon. Thank you for joining in. How important is that 24,000 mark now for the Nifty? And does this remain a buy on dips market, even though we are down about 115 points right now on the index? And couple that up with your stock recommendations as well for the afternoon.
Yeah, good afternoon. See, we tend to look at Nifty to understand how market is going to move. Nothing wrong in that. But at a time when, Nifty is holding good important support zone, yet lacking momentum on the upside, Bank Nifty not correcting, not even moving higher, not even leading to the front. I think we need to look at the broader markets. We need to look at the breadth of the markets. And when I look at the relative strength of broader markets, Nifty 500, Nifty small cap, Nifty mid cap 100 index, all of them are outperforming Nifty. It tells us this stock specific market, we need to focus on broader markets for opportunities. I'm not expecting big move on the index. 24,500 would be the upside hurdle. 23,800 would be support. And I think the bigger game is taking place in the broader markets. That's where our focus should be.
All right, Pritesh, and what about your specific stocks as well?
Oh, yes. We like the first one is FSL. Now, this particular counter, it is outperforming small cap index. It is outperforming the entire the peers of the small cap basket. So we are talking about a big bullish data breakout coming in after a bullish anchor column. So I'm talking about target about 460 and the stop loss would be around 380. The second one which we like is granules. Again, we are talking about series or double top buys on pointer figure chart. And again, we are witnessing a follow through the bullish anchor column. So buy for a target of 680, stop loss would be around 580.
Right. You know, Pritesh, a lot of these auto names were moving in yesterday's session and even in today's session with the likes of Tata Motors. You know, Eicher was up 9% yesterday, and the likes of Maruti and Mahindra. Which among the auto companies look more attractive on the charts?
Yes, I think we are talking about big base breakout in Eicher Motors and also in M&M. Now, see, M&M is outperforming the market during the time when it was correcting. It did well. It held on to support zone, and now it's the first one to move higher from the entire autos basket. So I think when we talk about relative strength, M&M is the first one which comes to our mind. So I won't be surprised the stock goes to levels 3,800 also. And Eicher Motors, I think the stock was locked in a long trading range for a pretty long time. So I think this breakout which we saw yesterday, we are going to follow through move coming in.
All right, Pritesh, thank you so much for sparing time and joining us today with your views on the index and on specific stocks as well. By the way, HDFC Bank is now down over 2%, and that is also putting in some pressure on the Nifty. By the way, some flashes on your screen now. And ICICI Securities has come out with a note on city gas companies. It says that the government order related to diversion of gas, it's positive for these companies, be it the likes of IGL, MGL, and for Gujarat Gas. Remember, all of these companies had seen a very steep correction from the highs after a dual reduction in gas allocation. And you know, the government has asked GAIL and ONGC to ensure that there is proper supply of gas to these companies, and ICICI Securities says that this order is positive for these companies. Take a short break. Up next, we'll be joined by the management of Wockhardt to discuss the road ahead for the second half of this year and a lot more. Stay tuned. Welcome back. Now, Wockhardt is the company in focus, and that stock is doing well today. In fact, it has done really well over the last 12 months. And today's move is courtesy the company announcing that the Central Drugs Standard Control Organization has approved an oral antibiotic to treat community-acquired bacterial pneumonia. Joining us now to discuss this and a lot more is Mr. Habil Khorakiwala, who's the chairman of Wockhardt. Mr. Khorakiwala, good afternoon. Thank you for joining. Wishing you and your team a very happy new year. First off, starting off by asking you about this very drug that you have recently received approval for. Could you describe the size of this and the potential that it offers you now that you have the approval for it?
The drug which we have received approval is McNab, that is nifty. It is meant for managing pneumonia, and we would be initially introducing and talking to specialists like pulmonologists and chest specialists, mainly because we want the drug to be restricted to the area where other drugs don't work. So the size of the potential of this drug in lower respiratory tract infection is roughly 15 million patients. And with the price point which we are working out, it would be something of the order of 4,000 to 5,000 crores as a potential. And we should get about 65-70% of market share over the next 4 to 5 years.
Okay, all right. Hi, Mr. Khorakiwala. Good to see you in, and thanks a lot for joining in. Wishing you, your team, a very, very happy new year. This is Nigel on this side. If you could tell us, when is the commercial launch of this drug? If you could give us a rough timeline. And also, if you could tell us, for you as a company, what could the potential revenues look like from this drug? FY 26, 27, 28?
First, let me take this opportunity to wish all the viewers a happy new year. As I mentioned, the potential of this drug is roughly 4,000 to 5,000 crores. And obviously, this happens over the next 4 to 5 years. So by the second year, we should be looking at something between 200 to 300 crores as the drug potential. And then thereafter, it will become significant.
Plan on taking this drug to other markets as well? And if that is the plan, what is the approval status for that?
We should be getting approval early in Saudi Arabia because they have already classified this drug as on a fast track. So in the next 6 to 9 months, we should have an approval in Saudi Arabia. And other markets, depending on the approval time, it would be somewhere between 12 to 18 months in all other major emerging markets.
Okay. Just to get the numbers correct, you said the total potential of the drug is 4 to 5,000 crores, right?
In India.
In India, that's the market size.
That is a market size for the indication and where the drug resistance are significant and existing drug do not work.
Okay, all right. And how much of that could you look to garner in terms of a revenue projection or an aspiration for Wockhardt from this drug, say in the next 2 to 3 years?
Maybe something about 15-20% of market.
So from this drug itself, it could be nearly a 750 to around 1,000 crore opportunity?
Yeah, I would say 15-20 crores, about 4,000, 5,000 crores. So it comes about between 5 to 700 crores potential in next 2 to 3 years.
Interesting.
Mr. Khorakiwala, what's the status on this WCK 5222? Because there has been a lot of positive developments that have come in with regards to this drug. When are you likely to get the final approval, sir? If you could share a timeline for that.
See, we have completed phase 3 clinical trial, which is a global trial. We would be able to announce the result once it is decoded. And that would be available sometime in next 3 to 4 weeks. And we should be filing to US FDA and Indian authorities sometime in the middle of the year, July or so this year. That is our plan. And after that, we should receive approval between 6 to 9, about 9 months' time. So by middle of next year, we should have the product approval, and then after the introduction, worldwide basis. But probably in India, we might have the drug available before the end of this year.
And once that is available, when does that start reflecting in your financials, Mr. Khorakiwala?
It should start reflecting in the next financial year, that is 26-27.
So FY 26-27.
Because normally it takes about 3 months after we receive first approval before us to market the product.
Right. And what about the 6777, the WCK, which now gotten a fast track designation from the FDA? Now, what's the status on that?
That is a once-a-day antibiotic. It would be the only antibiotic in critical cases, which is once a day. And we have completed phase 1 clinical successfully. And we would be initiating phase 2 clinical trial during the year.
What is the opportunity size for this? If you could share an estimate for that?
I think it will be very difficult for us to do it because we have to complete phase 2, phase 3. It's about 3 years away before we will get an approval of this molecule. So we have not worked on that, but it is very significant because it will be the only once a day, and therefore post-hospitalization normally for 3 to 5 days antibiotics are given in serious cases. So once a day would be a highly preferred choice over 3 or 4 times a day, which is the current antibiotics.
Mr. Khorakiwala, there was a point when Wockhardt used to report double-digit margins, but there has been a significant compression in those levels. From the current FY24 levels, which was around about 3 to 4%, what do you expect to end this year with? And is there a projection that you have or you aspire to get back to double-digit margins in the near future?
I believe that next year, that is 25-26, we should be nearer double-digit margin.
So you expect to reach near the double-digit margins, right? So how has the second half been so far? We have come to the end of the third quarter. How has business looked like this time around, and what's the road ahead looking like as well?
As you would have seen from our normal financial, that quarter on quarter we have been improving and doing better. And the improvement and growth will continue in the coming quarter also. We also see a greater opportunity next year on our diabetic portfolio, especially of insulins, because you must have heard that Novo is discontinuing cartridge insulin, which is a very large market in India, and where we have approval, we have our products in the market. So we expect a part of the vacuum which is created to be captured with our portfolio.
Got it. Okay, all right, Mr. Korakiwala, final question before we let you go. Some of these approvals will come on stream. Things are looking up. The endeavors to get back to double-digit margins. What about growth? Give us a rough revenue growth estimate that you have as an aspiration.
We'll get into double-digit growth next year, definitely.
But that would be conservative, right? You want to narrow down on that? Mid to high double-digit growth? Could it move into 20%?
Yeah, I think you can say fairly safely that it would be relatively a better double-digit growth.
All right, Mr. Korakiwala, thank you so much for sparing time and joining us today. Wish you a very happy 2025 once again, and good luck for the rest of the year as well. That was the management there of Wockhardt, aspiring to get back to double-digit margins and double-digit growth as well by next year. But as we slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app, where you can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app right away from the Apple Store or the Google Play Store. Time for a short break. Back soon.
Welcome back. Markets are still down close to around 120 points odd, but let's get you some market opinion. Earlier today, we spoke with Mr. Mark Mobius, the chairman at Mobius Emerging Opportunities Fund, and he says he remains optimistic on the Indian market and is looking at companies that have semiconductor orientation. Let's listen in to that conversation.
I think going forward, you're going to see a very good market in India. And India, I believe, is going to benefit from the Trump administration, simply because, first of all, the Trump administration will not favor the Chinese market. And if you look at the global picture, where else can investors go overseas? Where are the best places? And India comes up all the time because of the incredible growth of the country, because of the reforms that are taking place under the current government, and simply because there's so much value in the market, companies with very high return on capital, etc. So I'm continuing to be optimistic about India generally. Well, first of all, I would look at export-oriented companies to begin with because of the currency situation, and also simply because India is gradually becoming more and more competitive against the Chinese export. But those companies that are exporting, let's say Infosys that exports a lot of software, they are going to become more competitive because of the weakening rupee. So I think you've got to look at many of these stocks that have a US dollar income component will continue to do very, very good. Trump is going to lower taxes. Secondly, he's going to cut out a lot of the bureaucracy and a lot of the paperwork, a lot of the impediments to doing business in America. This is going to be very, very good, not only for American industry, but for foreign industries. Because you must remember, if you cut out a lot of this bureaucracy, it'll be easier for Indian companies to do business in America. But I believe that going forward, what I want to look at is companies that have an orientation towards the semiconductor industry. Unfortunately, we have not yet been able to isolate such companies, but we're going to look at those very carefully because I believe India is going to become a big competitor in not only low-end IT and low-end computer chips, but high-end as well. So I believe that's one sector that I want to look at more carefully.
Mark Mobius there and his optimism on the Indian markets. But Petronet LNG is a stock that was a big underperformer in yesterday's trading session, and it was in a market where the Nifty was up almost 400 points, but today is seeing some bit of recovery after that kind of fall that we saw in yesterday's trading session after the PNGRB note and the clarification from the company as well. A lot of brokerages have come out with their views on the stock. JP Morgan has a buy recommendation, a 377 rupee price target. They say that this overhang is likely to continue over the near term, and what they also say is something that even Petronet said in its clarification yesterday, that the PNGRB does not have the authority currently to regulate these LNG regas terminal tariffs. And the bigger takeaway is that these tariff regulations may not be ideal for the company, is what JP Morgan is saying. Now, they've highlighted some triggers as to what the stock can benefit from, and is the fact that capacity expansion that completes by March, which is a 5 MTPA capacity expansion, the seasonal demand of power, seasonal uptick in power demand that is also going to take place, and that 5% tariff increase that kicks in from this month is something that will benefit the stock, and is something that PNGRB also highlighted in its note yesterday. The Morgan Stanley too has an equal weight rating on Petronet, is a 400 rupee price target. What they say is that these recent concerns on these regulatory interventions are overdone for Petronet LNG, and also they highlight some near-term triggers, one of which is capacity expansion that JP Morgan also spoke of. The others include the normalization in Asian LNG prices post the winter season, and they are expecting better near-term earnings for Petronet because of the fact that India's LNG imports have been a lot higher compared to estimates, and they say that the Dahej terminal remains the most well connected to India's natural gas grid. Remember, it's the Dahej terminal that is in focus for Petronet, and the valuations look attractive for the company because more clarity on volume growth emerges for FY26 and FY27. So mixed reactions from brokerages, expecting an average of 15 to 18% upside from current levels, but the decision, the capacity expansion and the Dahej facility remains the key to watch out for.
Okay, all right. Well, almost, I just want to pull up the metal index. That's doing quite well in today's trading session. It's come off the lows of the day. But there's one stock that's under pressure, that is Nalco. That's moving in the reverse trend. The reason is because alumina prices, we were talking about this, that there was a shortage. It had moved to the highest that we have seen, in multiple years, went to around $850 per ton. From the top, it has seen a sharp correction. So Nalco is the one that has the highest linkage to alumina. And alumina prices are down by close to around 25 to 30%. Get a very, very rough rate out there. And overnight, it's down close to around 5 to around 6%. So as we speak, the traded futures on alumina, that's down by close to around 5%, which explains why Nalco is underperforming today. It's currently at the low point of the day, though you have the metal index that's actually moved up. So just want to highlight that for our viewers. One of the reasons why Nalco is underperforming is because alumina prices have seen a sharp correction. There was a deficit that was there, which now there is some supply that's come on stream, and there's lower aluminium production, which in turn is hurting Nalco.
Interesting. We spoke about this just a few days ago.
Yes.
We also have an explainer on our website if you could catch up on that for Nalco and its linkage to alumina. Nigel, thanks for sharing that. The other one though, the metals are doing well, but what's also doing well is crude oil prices, and that is having a bearing on ONGC. That's the top Nifty gainer today. Upasna is joining in with key highlights from a Jefferies note on the stock. Upasna.
Well, Jefferies has given a buy rating on the stock but has cut the target price by 6%, that is from 410 per share to 385 per share. Now, the brokerage says that the 30% correction in the stock in the past 3 months that is seen, it appears to be overdone, and crude price volatility impact on earnings is limited to just about 2%, as 95% of the domestic crude production is capped at $75 earlier. It also says that the consolidated EPS should also benefit from improved earnings outlook of HPCL. That will certainly bode well for the company, and recent regulatory action bodes well for improved profitability of the company even going forward. The brokerage has also highlighted that one of the key triggers for the stock going ahead is the company's likely ramp up in KG Basin production, which is likely to on board in Q4 FY25 or Q1 FY26. The stock is currently trading at 6 times 1-year forward PE, and hence Jefferies has given a buy rating on the stock, and we can certainly see the stock surging in today's trade.
Oh, absolutely. And ONGC, along with it, Oil India is also moving in tandem with that. Another 5% move there as well. Oil India, mind you, the best performing PSU stock of 2024 and up 12% in the first 3 days of 2025. But from oil, we move to gas, and city gas companies are in focus. The government has asked ONGC and GAIL to allocate LPG shrinkage to these city gas companies in a phased manner. Now, what does this mean for these IGL, MGL and the likes? Vivek is here to explain just that. Vivek.
Well, that's right. You spoke about oil companies. Now we're discussing the gas companies. Quite a lot of news flow that's come in. So now, what we are actually highlighting is a circular that is dated December 31st, 2024. In this particular circular, government, and the MOPNG have actually asked both GAIL as well as ONGC to allocate LPG shrinkage to the CGDs, which is the IGL, MGL, as well as Gujarat Gas. This is going to be done in a phased manner. So out of the total LPG shrinkage of close to 2.55 units or million metric standard cubic meters a day, 1.3 units is going to be allocated to the CGDs. Along with that, they've also clearly instructed GAIL to not reduce allocation further without the ministry's explicit approval. Now, what do analysts say on the back of this particular development or on the back of this particular circular that has come out? Number one, what they're saying is that this particular move restores nearly 1.3 units of the APM gas. Now, remember, in October as well as November of 2024, the APM gas allocation for the CNG segment was cut very sharply from 70% to 45%. Remember, it was cut by almost 6 units. Now, what this move indicates is that gradually over a period of time, close to 21% of the total cut that had been taken away as far as APM gas allocation to CGD is concerned will now gradually return back to the CGDs. And there will not be a change unless there is an explicit circular that once again comes in from the government. So now what analysts say is that this particular move reduces the quantum of price hikes that the CGDs would have had to take in order to go ahead and protect the margin. So remember, both volume as well as margins which were at a risk, now that particular risk is mitigated. Remember also price hikes of close to 1.5 to 3 rupees a kg has already been undertaken by the CGDs. So what analysts believe is that the margin erosion that was anticipated has now been mitigated, and on the back of that you're seeing all of the stocks do quite well in the session.
Indeed, a sharp recovery in shares of IGL, 4.5% higher. MGL and Gujarat Gas also trading with healthy gains. Time for a short break. Up next, Manisha Gupta joins in with Amit Pratihari, the Managing Director of De Beers Forevermark. Stay tuned, back on the other side.
Welcome back. Joining us on the show now is Amit Pratihari. He is Managing Director at De Beers Forevermark. Amit, hi. Wishing you a very amazing 2025. And stepping back, and if you look back at 2024, how would you say has been the natural diamond market for India and for the globe?
So first of all, wishing you a happy new year, Manisha. I think this year is all about positivity, and we start with a very positive note. First, I will talk overall market, and then we'll come back to India. Overall market was, I would say, it is not a hidden secret, a little bit under stress, primarily because of US and China. Okay, and those are not related to anything but the economical situation and those factors which is playing in terms of demand for luxury good, and of course its impact on the natural diamond. But I think in the whole story, one of the bright spot, and it is not a hidden secret, it is about India. And in India, we are growing in a very, very positive, way. And if you see, most of the retailer have presented or has given a solid growth projection, what they have reported, and they also see the next quarter for the financial year in India comes out to be very, very positive. So I would say overall had been a satisfactory year of 2024, and we look very positively 2025.
Amit, let me come to you in sense of prices, because that has been a bit of a discussion, and there have been various reports suggesting that even as natural diamond prices hit all-time highs in 2022, 23, 24 haven't given you that kind of returns.
So yes, I would say that to a certain extent you are correct, Manisha, but this whole price correction is at a midstream. Okay, and most of the time we start, getting worried of what happens at the midstream versus at the retail end. Yes, there has been a price correction. That's primarily to manage the midstream, So there is a demand and supply when the two largest market has completely slowed down, particularly in China. Okay, there will be impact in the whole pipeline, and to accommodate that, wherein the manufacturers are not under stress, thus correction has happened. But when you see at the retail end, the prices remains intact, and this is a short-term phenomena, and we see in the long term things are getting better. And we are already seeing an early sign. If you look at a 30-pointer and up, there is a demand, and there is already a correction in that segment particularly.
Amit, what is that you're looking at in sense of Indian demand growth? What is the penetration as of now? And also, what are plans now that De Beers is putting out in sense of its marketing, campaigning for 2025? We already have seen a lot of work being done in the last month or so, but how are you carrying it forward in this year?
So, Manisha, first of all, in terms of De Beers' approach, we are seeing a very, very positive year for 2025, particularly for India. Our plans for India is very strong this year. I would say, I think this is one of the best year what we are looking at in terms of investment, and that's happening in multiple fold. One is the category. Okay, you have already seen and must have covered, our partnership with Tanishq. Tanishq is actually the best retailer in the country. They're known as the retailer for the India. We have a very strategic partnership, to promote natural diamond and ensuring that, the team on the floor are well equipped to answer the queries and give confidence to its existing customer and acquire new customers. So that part is happening. We are coming up with a big announcement with GJPC that is happening in a couple of days, wherein we will be supporting retailers from 2-tier and 3-tier cities, making sure that, how they sell natural diamond. And we are enabling them with good tools, so that they can talk about natural diamond, the positive impact it has, and business-wise also. Good old days back, like how we used to do generic campaign, we are also in the plan of executing those campaign for generic campaign for building up the desirability for natural diamond. So that's happening from a category point of view. Then in the space of technology and verification, we are very strongly pushing our lab now. Previously, we have a state-of-art in laboratory in Surat. That's primarily used to focus in-house brand. Now we're opening up that laboratory for all the jewelers in the country.
Okay.
In terms of jewelry certification, diamond grading, and melee verification services. So that is open for all retailers. That's been now commercialized starting January. Then comes the technology verification. So we have machine state-of-art technology like Synth Detect and now diamond verification, diamond proof machine, which we launched in JCK. We are commercializing that in India. So that is one happening. The third part is about brands. So as you know, Forever Mark, we are recalibrating the business model, and we are happy to say that in the first quarter or early next quarter of the year, we will be launching the Forever Mark in a new form of business, which is completely exclusive store, both for physical and digital store is happening. So a lot of happening.
Right. Oh, absolutely. There's a long list that you put out for us, Amit, to watch out for in 2025, and we'll absolutely keep an eye on that and watch for it too. Thank you so much for joining us today and talking about diamonds, prices, demand growth, and of course, all of those plans for this year. But with that, completely out of time on this show, we'll of course come back after this break with Business Lunch, taking all the action forward.